Hi, everyone. Welcome to our panel discussion on FinTech and the new economy as part of this year's All Markets Summit Asia. My name is Esther, and I'm the editor-in-chief of Yahoo Finance Singapore, and I'll be your host for the panel discussion today. Now, like it or not, the pandemic has accelerated the digitalization of our everyday lives, and tech is definitely in the driver's seat. It has embedded itself so deeply in the global economy and culture. Businesses and consumers alike need to embrace it, and they need to do it fast. This panel today will discuss the opportunities and trends that have come about and how we can innovate for the future. We have with us here today three leaders of the FinTech industry in the region. First, we have Dwaipayan Sadhu, the CEO of Trust Bank in Singapore. Welcome, Dwai. We also have with us Steffanie Yuen, the Managing Director and Head of Hong Kong for wealth management platform Endowus. Hi, Steffanie. Glad you can join us today. And last but not least, we have Shadab Taiyabi, the President of the Singapore FinTech Association. Again, we are so excited to have all of you here today. And now let's get the ball rolling. First question, Dwai from Trust Bank. So we mentioned that it's been just a tad over a month that you've launched. How has the ride been? What interesting insights can you share with us?
Thank you. Thank you for inviting me here. It has really been a fantastic first 30 days for us. But before I start, maybe a little bit of context for some of the audience who may not know who Trust is. Trust is a partnership between Standard Chartered and FairPrice Group, who is a part of NTUC. Now, as you know, Standard Chartered, of course, is a large bank focused on Asia, Africa, and Middle East, and has done many digital innovations around the world. FairPrice Group is a part of NTUC, and NTUC has multiple interests. FairPrice is the largest supermarket in Singapore. They have also one of the very large food chains and coffee shops. They have also one of the largest insurance arms and many other social interests. Now, what these two companies coming together brings us is this incredible ecosystem. So believe it or not, FairPrice Group actually serves over 1 million client experiences every day. That's 20% of Singapore. Now, coming to Trust, we have now launched just over a month back, and we have been humbled and really excited with the response that we have received from our clients. Over 100,000 clients have joined us in the first 10 days. And after a month, over 200,000 clients have joined us. But more than just the client numbers, we are really enthused by the reception that the clients have shown us by adopting the various digital services that we have brought to them. For example, through our digital coupons and stamp cards that we have brought to the clients, we have seen fantastic adoption rates. You know, in Singapore, we love coupons and stamp cards. Many of us keep them in our wallets. We have digitized this experience. So within the first month, over 120,000 of these coupons were redeemed and over 60 tons of rice at FairPrice Group. But of course, in addition to that, we have seen very enthusiastic response for our referral program. Every bank offers a member get member. But what we have done differently, we have end-to-end digitized the process. So inviting your friends and family to join is very easy, but also you get instant gratification because the rewards are in your wallet, in your mobile, real time. And this has been really seeing very, very good adoption rates. So overall, a big round of thanks to everyone in Singapore who have joined us. And we are hoping that this is just the beginning. And many, many of you will be joining us in the weeks to come. Thank you.
Steffanie, now on to you. Endowus has operated in Singapore for quite some time. What has been your experience here, and what are also some of the insights that you have in the Hong Kong market?
Thanks, Esther. So interesting you asked. My firm Endowus, we actually recently just co-published a report with KPMG on analyzing some of the trends that we see, particularly in the wealth management space, not only in Hong Kong, not only in Singapore, but the whole of Asia. And there are some particularly sort of insightful sort of pieces I would like to share with all of us on this panel today out of this report. So I guess the first one, which for those of us who are in this industry is probably not news, is that we definitely is seeing a sort of growth trajectory for wealth management industry in Asia. So in the next 3 to 4 years, based on KPMG's estimates, Asia is going to overcome Europe to become the second largest wealth hub in the world. And that's huge. So I want to dig a sort of a layer deeper. So why exactly is sort of Asia's wealth management industry experiencing such fast growth? There are actually some interesting factors or underlying reasons to that, which I find even more interesting than just a headline. So first, I think it's the most obvious reasons that we probably all know. It's just general growth of entrepreneurial wealth, household wealth. We've seen sort of a ton of innovation, growth of sort of entrepreneurs starting up their tech firms. So that had created a generation of entrepreneurs and also wealth generation for their employees as well. So that's not a surprise. But I think the second one we're also seeing around the globe and in Asia as well is that this intergenerational wealth transfer. So the first or second generation of wealth where traditional accumulated their wealth in traditional industries, say real estate industries. Now they're handing their wealth to their second generation, and probably the younger folks probably have sort of different ways of how they think about how they manage their wealth. So that's also a driving factor to the growth of the wealth management industry. And I think the last point, which is very close to heart to the theme of this panel or this summit today, is obviously with COVID, the biggest theme we see out of COVID in the past 2 years is the demand digitalization of what Dwight was saying. No longer sort of collecting coupons in my wallets, right? I want everything to be on my mobile phone, and we're conducting meetings in Zoom, just what we're doing right now, right? Even my nephew, who's 4 years old, knows how to operate Zoom because that's how he went to kindergarten for the past 2 years. So that's also one key trend that we're seeing. And you'd argue, right, wealth management, particularly on the higher wealth segment for the private wealth, you'd argue is a very relationship-based, face-to-face kind of interaction. But even with that segment, we're also seeing sort of needs or demands coming out from these sort of high net worth individuals. They don't want just the wine and dine. They also want to interact online, to do things digitally. So that's also something very interesting we've observed.
Thanks, Steffanie. Yes, I think digitalization gives us a great opportunity to address some of the customer pain points, that traditionally outside of digitalization customers may face. And I think with data and technology, not only can we listen and answer some of these and solve some of these pain points quite effectively, we can also anticipate some of these needs. Back to Dwight, how has trust done this? What has been your experience?
Yeah, thank you. A couple of points I'll make there. I think number one is about anticipating client needs. I think it is, as a new bank coming into a market which is very well banked and where there are many players offering digital banking services, it's really important for us that we build something which really solves a client need. If you just have a flashy app, people might come to you, but it's not that they're going to stick with you. So we have spent a lot of time in trying to understand how do we differentiate? How do we really address something that's not really met today? And from that, we got some real in-depth understanding of a few areas where, in spite of the availability of many digital banking services, people are feeling underserved. One great example is onboarding. Now, onboarding experiences have been digital for a very long time, but we still found out through our many rounds of client interactions, there is still significant room for improvement. We managed to simplify the process. We managed to streamline it using very modern technological tools. And what we managed to do was to bring down the entire onboarding time to less than 3 minutes, from the time you download the app to the time that you actually have a credit card in your wallet to use. Now that has been very well received from the market. Now you can say that, is this really an innovation? Because it used to take 10 to 12 minutes, now we have brought it down to 3 minutes. But if you consider and compare it against other digital experiences that you use, the time that you need to order a food, the time that you need to order a taxi, that's when you are comparing your experiences against. you're not really comparing it against the time that it used to take to go to a physical bank branch. So that's why we feel that even a significant reduction in onboarding time has been really well received by our clients. So these are a few examples of how we have tried to use data, how we have tried to use client insights to really design our journeys and make sure that we build something that is relevant and that makes sense to the client for an everyday use.
Thanks, Dwai. Shadab, from an industry point of view, what are the areas, has the industry done well in terms of solving customer pain points? And what are the areas that still you feel there's some way to go?
Thank you, Esther, for having me. First of all, I'd like to give a bit of more color on the National Industry Association, the Singapore FinTech Association that I represent, just to give you a bit more context in terms of the verticals that we represent, and then I'll try and answer your question. So we are the National Industry Association, established about 6 years ago, and we represent over 800 plus companies in the Singapore FinTech ecosystem. That includes about 70% of them being FinTech companies, and the rest are our associate members, including financial institutions, consulting firms, law firms, and so on. So overall, the FinTech ecosystem in Singapore has grown quite fast in the past few years. Just to give you some numbers, we were less than 100 companies back in 2015. And as of 2021, we are close to 1,400 companies. In terms of the investments, we had over $20 billion going into equity investments back in 2015. And as of 2021, it had gone all the way up to almost $4 billion US. So the industry segment, various verticals within the FinTech ecosystem have grown quite rapidly, quite fast, payments being one of the largest ones, followed by, of course, we have InsurTech, WealthTech, RegTech, and so on, other vertical segments as well. Of course, with the new digital banks joining the foray, it's only looking an uphill, I would say, journey for all of us in terms of development and adoption across the user base and customer base. Where we have done very well, I would say, adoption of cashless systems, be it cards, be it public infrastructure that have been set up like PayNow and SGQR, some of the other payment rails. There has been an increased adoption, and COVID, without saying the cliche, it has been one of the biggest digital transformers for all of us, and it has really helped spur the or accelerate the activity, both in terms of deployment of solutions as well as adoption of solutions by the customers. So they have done quite well. So in terms of the collaboration that has happened across multiple segments, there is of course been a good amount of development in the overall sustainability space as well. So number of our FinTech companies are focused on green finance and sustainability-led solutions. Some of them are in the space of making sure that the overall sustainability impact are being measured and certified, and some of them actually use the latest technologies of Web 3.0 blockchain to actually record that in a registry. So these are, I would say, areas where it has done pretty well. We have also been working very closely with our regulator, who have been very collaborative, and the policymakers who have been very collaborative in helping grow the FinTech ecosystem in Singapore as well. So there are many aspects of the industry collaboration that have helped the industry grow, and users have also, of course, benefited from them. And that's where we continue to work with our various stakeholders to help grow the adoption of the FinTech FinTech's products and services across the region. Thank you.
Thanks, Shadab. You made a really interesting point. Technology definitely has helped us to answer some of the needs or priorities of today's investors, such as sustainability and the need to monitor that all the way from source. I wanted to touch on perhaps the segment of society when it comes to wealth management that have relied on traditional wealth management. So FinTech, allows a lot of independence, and that can be quite scary. Virtual wealth management can be quite scary for some people. Now, how has perhaps Endowus what have you done to make it more accessible? And can you also share if there are any sort of government regulations in terms of financial education or in trying to manage risk?
Thank you, Esther. Yeah, I think based on what you mentioned, the intro, and also what Shadab and Dwight was saying, I think sort of the first wave of fintech, it's about getting easy access, getting fast opening accounts in a matter of minutes, not like hours, not like days. So that's sort of a given. And I think particularly when you talk about the investment and sort of wealth management industry, I think it's sort of an even upgrade to like payments or like other industries, because it's something very personal. It's like people trying to invest their hard-earned savings. It's a very much a personal journey. And you rightly mentioned to a lot of people, it's something that's very close to heart. It's very difficult to get away on the human touch of that. And I think increasingly, and what Endowus is focused on is not about sort of, I think, in the first wave of what we call wealth management technology, wealth tech, a lot of players thought about, oh, I can use technology financial products so that quote unquote clients can beat the market. I think throughout the years, it's been proven that very hard to beat the markets. Not everyone can be Warren Buffett, right? But increasingly, what I see the second innings of wealth tech growth in this subsegment, it's more about the servicing part. It's the more I sort of dive down into the industry, the more I realize actually the crux of wealth management is about human psychology. How about how clients think about? So I'll just do a small experiment to everyone and sort of people listening in, right? If you think about maybe on a particular day, your portfolio is down 10, 15%. You're probably in a lot of pain. You just think, oh my gosh, like I lost so much money in one single day, right? But if you flip it and you think about it, maybe one of the stock you held today went up by 10%. Do you think the joy that you feel is as much? Usually not, because this is something of a proven concept of what we call risk aversion bias, that you actually feel a lot more pain when you lose money than when you sort of earn the same amount. So sort of learning about these sort of human psychology or how our human brains work, then we think about actually how can we use technology to help our clients sort of handhold them throughout this, particularly this year has been a very volatile market. How can we use that platform to effectively help our clients manage their wealth? Historically, these kind of hand-holding, sort of very high-touch service, it's only reserved for ultra high net worth individuals, sort of phoning up clients, telling them what's happening, telling them, oh, do not sort of act reactionally, sort of why is that? But with technology, we're trying to sort of think about what Esther, you're saying. We can preempt sort of questions of clients and how they behave. So their clients would leave sort of their behavior on our platform. Some people tend to be more emotional. When we see like a down market, they log in 20 times. You know exactly, they're just really worried, right? Their clients, when markets are down, they don't log in, they just do a few trades. You know, they're very like savvy investors, like what Warren Buffett was saying, like when markets are down, I should go in, right? So based on sort of these clues that clients leave with us, we use technology to think about maybe there are ways for us to segment them differently, serve these personas differently. And it's beyond just a sort of level one simple, it's like, okay, it's like a good UI UX. It's sort of how we mimic that kind of human experience with technology. And this is sort of the second wave, I think, of fintech or wealth tech that I find super, super interesting. Beyond just like opening accounts in 5 minutes, I think this is sort of really the next level of fintech.
Shadab, from an industry point of view, what do you think, should be the position when it comes to risk management for clients, virtual clients in that sense?
Sure. Thanks, Esther. I think the word that I'd probably use for this is collaboration. And that is very well reflected in the mix of the Wealth Tech subcommittee that we launched at SFA earlier this year as well. It has 3 B2C players, Wealth Tech players or B2C robos, 3 B2B fintechs or Wealth Tech providers, 1 large global bank and 1 large global asset manager. Now, that actually shows you how collaboration is so important in providing a virtual wealth management solution that customers aspire for. And just to add on to what Steffanie was saying, it's about a very good customer experience, and it's about expanding it across to a larger set of customers. So there are two aspects that wealth tech providers are solving. One is, of course, being able to provide wealth management or a white glove kind of a service to a much larger base of customers, which was only available to high net worth individuals earlier. And then second aspect is being able to provide products which were seen as more accessible or only accessible to accredited investors earlier, to slightly broader class of customers as well, by being able to tokenize them, by being able to make the lower minimums possible. So all that has been only possible because the technology is there now to support that. Now with the level of user experience that they can provide, it's much easier for regular customers, mass affluent customers to be able to access wealth management. The other aspect that comes in there is, I would say, there is still that section of the user base or investor base who is very much comfortable to work with a financial institution, or with a partnership with a financial institution is involved as well. So this is where I think the mix of my wealth tech subcommittee comes into picture as well, where the B2B wealth tech players are working very closely with some of these financial institutions to launch more customer friendly, more easily accessible, as well as with lower minimum investment amounts, these kind of solutions to be available to the mass affluent customer base as well. Just to finish off, there is another aspect where I think technology is also adding a lot of value, is in the hybrid space as well, where there is a human advisor who is actually using technology to service their clients better, because they have more efficiency at hand, just because of the usage of digital means. So quite a few of the traditional financial institutions, as well as the new players, are also using technology, where they are offering hybrid personal financial advice to their customers using technology, but at the same time, the end user has the option to pick up the phone and at least talk to someone directly as well.
Yes, it's good to know lots of resourcing is going into some of these areas. So just to close off, have a lightning round for Steffanie and Dwai. What exciting things can we look forward to? Quick one. Dwai, please.
We are just getting started. I think in the coming months or coming years, we'll be looking to invite many more clients to join us. The rich ecosystem that we have gives us fantastic opportunity to co-create experiences and really digitize almost every step of the client journey that they have with FairPrice. And we also look for introducing new products and services. So really, it has been a fantastic start, but possibly we're in the first lap of a very long marathon.
Thank you, Dwai. And Steffanie.
Thanks, Esther. So I think I want to go back to the word Shadab said. It's about collaboration. I think there's no more clear cut of, oh, you're a fintech, you're a traditional FI. I think whether you're a big bank or a startup, you're all fintech. You have to embrace tech because that's what the clients demand, and that's how you only way to serve your clients. So what I'm really looking forward to is, as an industry, we work together and we create sort of good products, good offerings, what Trust Bank has offered, more digital coupons. And the angle is just to sort of create more customer value. I think that's what I really look forward to. So this is something that I want to end with, that looking forward to work very closely with everyone to create more customer value.
And what a great closing statement that is, Steffanie. I would like to thank all of you for joining us today for this discussion. And for more interviews, panel discussions, and other insights, join us in our other sessions of the All Markets Summit Asia at this website below.